wealthbranch.com.
5 investments to become a better investor. 1. Invest in compounding your intelligence. What do Warren Buffett, Charlie Munger, and Benjamin Franklin all have in common? They all have invested in their intellect and have compounded their intelligence. As the wise Benjamin Franklin once said, an investment in knowledge pays the best interest. Famed investor Paul Tudor Jones states, intellectual capital will always trump financial capital. Warren Buffett estimates that he reads about 500 pages a day and spends 80% of his workday reading and thinking. The following quotes by Warren Buffett shows how he built his intelligence. Look, my job is essentially just corralling more and more facts and information and occasionally seeing whether that leads to some action. I just sit in my office and read all day. That's how knowledge builds up, like compound interest. We don't read other people's opinions. We want to get the facts and then think. Charlie Munger states, neither Warren nor I are smart enough to make decisions with no time to think. We make actual decisions very rapidly, but that's because we've spent so much time preparing ourselves by quietly sitting and reading and thinking. We read a lot. I don't know anyone who's wise who doesn't read a lot. But that's not enough. You have to have a temperament to grab ideas and do sensible things. Most people don't grab the right ideas or don't know what to do with them. Charlie Munger, at the age of 95, speaks about his and Warren Buffett's ability to learn and change.
So, and besides, there's another reason why we're doing it. You have to keep learning if you want to be a good investor. And so, as we've kept learning and as conditions have changed, our investments have changed.
2. Invest in preparation. Abraham Lincoln once said, give me 6 hours to chop down a tree, and I will spend the first 4 sharpening the axe. Investing is more about sharpening the axe than crudely taking swings. Always be prepared so you know how to spot a good investment. Here are some ways to get prepared as an investor. Read 10K reports. Listen to earnings calls. Learn industries. Learn new investment strategies. Learn how to use research tools and websites. Formulate investing thesis. Learn the warning signs of bad companies. 3. Invest in patience. When prices go up, sometimes there is nothing to do but wait. While waiting, it's wise to get prepared for a market downturn. In a speech by Warren Buffett speaking at Georgetown University, he talks about waiting for the right investment at the right price.
Some given percentage. But Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things.
Once an investment comes, follow Warren Buffett's advice. When it's raining gold, reach for a bucket, not a thimble. I should have done far more. Big opportunities come infrequently. 4. Invest in preservation. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Warren Buffett. I must have heard this quote over a dozen times, but two concepts emphasize the importance of the quote. The first is stock options. When selling stock options, your capital reserves are the only thing that allows you to sell more options. A predictable growth stock allows you to increase your margin to sell options. You can make an excellent return selling options while your capital grows. You wouldn't want to use margin heavily, but if you can cover the margin and have a competent tax harvesting strategy, this is a lucrative plan. The second thing is the math of getting back to even. For example, if you have a $100,000 portfolio and it suffers a 20% loss, this leaves you with $80,000. You now need a 25% return to get back to even. If your $100,000 portfolio suffers a 50% loss, leaving you with $50,000, now you need a 100% return to get back to even. To be preservation-minded, memorize some of these statements. I never risk what I need for something I do not need. I do not need to get rich quick, but I do need to preserve capital because it was way too hard to create it. I worked for over 10 to 30 years of my prime to have a nest egg. Don't risk it. I would rather lose a couple of $100 than thousands in permanent capital loss. I can cut my losses fast and tax harvest, allowing me to invest in a similar asset. 5. Invest in time-saving techniques. Time is more valuable than money because time is irreplaceable. John C. Maxwell. It may be evident that you can borrow or earn more money, but you cannot make more time. After you have learned how to invest and create more income through stock growth, options, and dividends, outsource everything you can. If you can outsource cooking, cleaning, shopping, and errands for $500 or $1,000 a month, your focus is worth the money. Once you know how to sell or trade options, it may only take you a few minutes to make $500 or $1,000 a month, but hiring can save you hours.